Hey everyone, this is James with WSTrades.com. I want to talk about using standard deviation channels to help you make smarter trades and possibly spot trend reversals. So the standard deviation channel is composed of two lines parallel to the linear regression trend line and distance from it by the specified number of standard deviations. The upper line is placed above the trend line and the lower line below. According to statistical theory, 67% of the price plot points fall into the standard deviation channel if both upper and lower lines are plotted one standard deviation above and below the trend line. If the number of deviations is increased to 2 for each line, 95% of the points are expected to fall into the channel. If the price falls out of the channel, it is likely to move back unless a major trend reversal is taking place. So we've got some input parameters here. We have the price. We also have deviations, which we talked about 1 or 2. You can kind of adjust that in the settings, but by default, I think it's going to go to 2 standard deviations. Then we have full range, defines whether to plot the standard deviation channel for the whole chart or for the specified number of the last bars only. We also have the length, the number of last bars to calculate the standard deviation channel for if the full range input is set to no. And then we have the plots. We talked about the upper line, the midline, and the lower line. So the upper line and the lower line are actually going to be the standard deviation lines. And then in the middle, we're going to have the linear regression trend line. All right, so here in Thinkorswim, let's click on Studies in the upper right. And then click Edit Studies, and then in the smaller window we got a little search box in the upper left. I'm going to type in standard, and right at the top there we go, standard dev channel. Go ahead and double click that, click apply, and click OK. All right, so you have your midline here. You've got 2 standard deviations to the top end and 2 standard deviations to the bottom end, and you can see how helpful this was in spotting a reversal for ticker REV or Revlon, because this thing got outside of 2 standard deviations to the top side. And we know from statistics that 95% of the price action will be contained within this top line and this bottom line. So once you start to see something getting above this 2 standard deviation to the top side or below this 2 standard deviation to the bottom side, it's prime for reversal. I would say there's some special cases, like when GameStop went from $10 to $500. I mean, that's a little bit different. That thing had extended run to the upside. And then sometimes when companies are like ceasing operations and completely going out of business, you could see a stock go straight down towards zero. And that would be a case where you wouldn't have reversal once it got outside of 2 standard deviations. But you can definitely see down to the bottom side here, it got really close to 2 standard deviations. And then we had this crazy run and this crazy reversal. And now that it is super overextended to the top end, we're starting to see price action fall here. It's peeling back, and now it is actually back within that 2 standard deviation channel. So if you thought the information in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.